Yep. Okay. Good afternoon, everybody. My name is Damon Watkins, and I'm Director of Finance and Operations for Cal Poly CIE. Today, we're going to be talking about QuickBooks 101. Before I get started, I would like to just touch on something that Madison spoke about. The SBDC is a great program that is funded by both federal and state grants that enable small business owners to get access to consulting that normally would not be available to them. If you are not an SBDC client, strongly consider signing up for these services so we can assist you in growing your small business. Again, all of these services are provided free of charge. There's no charge to you. And these include follow-up sessions regarding things like QuickBooks, finances, and marketing. A lot of the sessions that I go through today and speak about, if there are additional questions or concerns, one of the things I do like to do is schedule up a follow-up session with a one-on-one scenario so that we can go over them in a little bit more detail. The only requirements for that to take place is you do need to be an SBDC client. So without further ado, let's take a look at QuickBooks 101. I'm going to give a brief overview of what we will be talking about today. One of the things that I strongly encourage is interaction. If you have questions as I'm going through the subject matter, please don't hesitate to raise your hand and pose the question to Madison so that we can answer it. With that said, if it's a very specific question, I do ask that you wait until the end. If it relates specifically to your business or a specific subject matter. This session normally takes about 90 minutes to 2 hours, and that's the reason I've added the additional time at the end, is if there are any additional questions and or concerns. Conversely speaking, I can gladly set up a one-on-one session to take a closer look at your business and see what we need to do to get you going. So without further ado, let's start with QuickBooks 101. One of the things I would like to reiterate is that I will be going through this study guide that I have set up. Let me get this slideshow. Okay, so one of the key aspects of today is you don't need to take any notes whatsoever. I will be standing out this study guide once we're done with today's session. As long as I have your email, you will receive a copy of it. This is important because I do more than one class relating to QuickBooks. I do a beginner's class, I do an intermediate class, and then I do an advanced and tax reporting class. And each one of the classes builds upon the last class. Everything that I speak to and teach is inside this particular study guide. So if anything comes up in regards to what we've spoken about or discussed, it's available for you inside the study guide. With that said, okay, let's talk about.
1 second.
Sure.
Stop your share and reshare. It looks like it's an extended long paragraph. Perfect. Now I can see it. Great.
So let's talk about what we're going to go over today in particular. So one of the key aspects of QuickBooks is the ability to input relevant information and ensure that you're getting the relevant information back. One of the key aspects of this taking place is there's a philosophy that goes along with QuickBooks that it's garbage in, it's garbage out. So to make sure that that is not taking place, one of the key objectives of today's lesson is to ensure that you have QuickBooks set up correctly. So some of the key aspects that we're going to talk about today is from the very start of installing QuickBooks on your laptop or your desktop, getting it set up and registered, registering with the Secretary of State, registering your local business with the city, and then moving on to build out things like chart of accounts, customers, and vendors. We will touch on all these topics today. Again, at any point along the way, don't hesitate to stop and ask questions. The only questions I try not to answer in this particular session is any tax-related questions. And the reason for that is taxes tend to be very specific to the industry and the business that you're in, and I don't want to generalize when I'm handing out advice. If you choose to have a follow-up session with me, we can do a one-on-one where I can take a deeper dive, or you can certainly attend my advanced class, which goes into a lot of detail in regards to tax reporting. Lastly, but not least, we actually go over the setting up of multiple users within QuickBooks so that you can assign specific tasks and responsibilities to individuals. QuickBooks also has the ability to assign these tasks based on access. So as an example, if you have someone that works in accounts payable, you can limit their access to accounts payable. They're not able to go into the payroll module and see what people are earning. So I'll go over the basic setup of getting this structured and set up with QuickBooks, which should enable you by the end of the session to have QuickBooks up and running. The last part about this is linking QuickBooks to your bank. And one of the nice things about QuickBooks Online is its ability to pull data directly from the bank, which enables you to process transactions the very next day and makes it a lot easier to reconcile your books at the end of the month. We'll actually walk you through that procedure as a whole, because once that's done, as long as you're doing the due diligence that's necessary in QuickBooks, set up correctly, relevant information as it relates to both the customer and the vendor, you should always be able to tie back to the bank at the end of every month. And I use this term quite a bit, but the bank for you guys in regards to QuickBooks is your one source of truth. So QuickBooks should always be able to tie directly back to the bank because we know the bank is accurate in regards to its transactions. If that is not taking place, we've either missed a transaction at the bank or we've missed a transaction within QuickBooks. And this is a great way to stay on top of those issues. If you're doing it on a monthly basis, you will always capture the expenses that you might possibly have missed or that were not recorded within QuickBooks. Again, stop me along the way if you have any questions in regards to what I'm specifically speaking about. So let's get started with what it actually takes to get QuickBooks set up. I'm going to start at the very beginning and assume that you downloaded the QuickBooks file, you've got yourself signed up and set up in QuickBooks Online. And the very first thing you need to do is register your company. And there's two ways we can go about that. We can go about it under a sole proprietor, which means when we're entering the registration within QuickBooks, we're putting in our own social, our own name as it relates to the business. Understand that if you set it up that way, you are setting it up as a sole proprietor, meaning that your business is not incorporated in any way. Now, if you are at the point in your business where you have incorporated your business, you have registered with the Secretary of State, you do have a tax ID number, this would be your opportunity to go ahead and set that up within QuickBooks. Please take the time to go ahead and do this correctly. It is time consuming at the beginning to get it set up, but it is vital that the correct and relevant information, including your business address, the tax ID number, and the business title is included in this setup process. When we get to the point where we are doing tax reporting, it ties directly back to that specific registration. And QuickBooks can handle doing the reporting for you, but it needs to ensure that it is set up correctly. So from the very start, we always need to make sure that all relevant information that is put into QuickBooks is relevant to the business and the entity that we're dealing with. Okay, so learning objectives of today. By the end of this, we're going to be able to sign into QuickBooks. We're going to be able to review the QuickBooks dashboard. I'm going to show you 3 different ways to navigate from the dashboard into both vendors, customers, and banking. We're going to look at how QuickBooks is set up and built as it relates to the chart of accounts. It's something that I will spend quite a bit of time on today because it's the most relevant area for when we first get QuickBooks set up. It's also the area that people have the least knowledge about, but it impacts their business as a whole the most. I'm going to review the transaction history. This will relate to the bank entries that we see posting within QuickBooks and our bills or transactions that relate to both our customers and our vendors. With that said, let me just give a story about QuickBooks from my experience, because one of the very first questions I get with QuickBooks is its scalability as it relates to your business. And a lot of people like to start out that they perceive that there's a point in time where QuickBooks will not be able to scale with their business. When I started out with QuickBooks 25 years ago, it was mom and pop's businesses of 10 and below that were utilizing QuickBooks. You leapfrog 20 years forward, I worked for REC Solar. I ran a $250 million budget through QuickBooks. I had over 362 employees in 19 different states. And though QuickBooks was not ideal in utilizing it because it's not really designed to scale that high, it was more than apt to the task at hand. If it can handle that and those sheer amount of employees, it can handle anything that anybody in this room needs to deal with from a perspective of a scalability side. So again, the perspective that QuickBooks can scale with your business is not necessarily the truth out there. There are better and more expensive options out there, but for small businesses right now, 10 and below, QuickBooks is ideal for managing your finances and keeping you on top of things for a decent price. So a couple of key points that I have encountered through personal experience. It is definitely recommended that you use the Google Chrome browser. Edge in particular has a number of blockers that for whatever reason QuickBooks Online doesn't like. And so I tend to find it's a little bit more stable when we're using Google Chrome. Again, personal recommendation, you can choose to use Edge if you want, more commonly known as Internet Explorer. Intuit actually designed QuickBooks to run on Chrome, so it is definitely more stable when you utilize Chrome as a whole. Can be used on Mac and Windows without any issues whatsoever. Chrome is the most widely used browser out there. You can open multiple tabs. And the key part, one of the key parts that I do like about Chrome is you can run multiple sessions. So if you wanted to view a specific screen within QuickBooks, you can simply open another tab, access QuickBooks, and open that. So if you were looking at AP and wanted to review the ledger, Google Chrome gives you the ability to do that. Edge sometimes will not. It will actually block you out and produce the pop-up blocker, which is what I think actually causes the issue. So long story short, use Google Chrome when you're using QuickBooks Online. You can use, as it states on here, some of the other ones. They tend to become less stable, which means the screen locks up and you can't go anywhere and you're worried about losing your information. So keep that in mind as it relates to QuickBooks. Next slide. So I'm going to just jump straight to the point where we've all installed QuickBooks. We've all signed into it for the very first time. And now we're at the point where we have to decide what do we want to actually do. The very first place that I want to start is your chart of accounts. What are your chart of accounts? Your chart of accounts is basically a roadmap to track all income, expenses, depreciated value, and anything else from a financial perspective as it relates to your business. Now, I'm going to share my screen of a company that I use as my demo for my chart of accounts. Okay, so everyone should be able to see my screen right now. I use an engineering company as an, oh, no.
Just up there.
So, but they can see my chart, okay. So as my demo company for today that we'll be looking at as we proceed through this session is RM Engineering. Now I picked an engineering company in particular because literally it encompasses everything from cost of goods to services taking place. But the key aspect of what I want to communicate here is the structure behind the chart of accounts. So the structure behind the chart of accounts is that we have revenue and income as the top level items here. You would link up your bank accounts to QuickBooks, which in turn would have the transactions hitting QuickBooks directly the next day. The nice part about this is you never need to worry about making sure that QuickBooks has captured that particular expense, because as long as it's hitting the bank, when I get into the bank transaction screen, you will actually see those specific transactions coming into the bank. But let's talk about the chart of accounts. So when you first go into the chart of accounts, it's a pretty long list of about 32 different line items. And here's the truth about that. You're not even going to use 10 of them, okay? So the first mistake that people make with the chart of accounts is they go in and they perceive that they need to build out this massive chart of accounts to track every possible expense that they want. That is not what you want to do. What you really want to do here is take a look at the chart of accounts and see how it works in regards to your business and condense it down. So literally all you're looking at is what relates to your business. Well, what do you mean by that, Damon? Okay, let's start at the top and take a look then. So as I stated in the beginning, right, I have our bank accounts listed at the top here with our bank transactions. You'll always note that you'll have two balances in there, right? The QuickBooks balance and the bank balance. Now, in this case, you can see that they don't tie, which tells me that there's an outstanding transaction that I still need to process and tag. But as we move down the line item list here, you can start to see accounts receivable, which are bills that need to be paid to you, are customer invoices that are to be paid to you, so cash coming in the door. But as we start to go down, you can start to see specific line items that may not relate to your business. So as an example, accumulated depreciation is a specific one. Not every business has accumulated depreciation. My recommendation in these scenarios is the very first thing I would have you do is go through the chart of accounts and deactivate specific line items that don't relate to your business. As an example, we would simply click on the drop-down menu and make this item inactive. Again, I do want to clarify, this is a really, really important part. Do not delete from the chart of accounts, ever. Here's why. Once you establish your chart of accounts and you start posting transactions against it, the system stores that information internally. If you delete a line item, you delete the information that goes along with it. So if you've got 3 months of transactions and you just reconciled those last 3 months, and then you go into your chart of accounts and you have a specific line item and you delete that line item, guess what's going to happen to the prior 3 months that you're already tied out? They're all not going to tie out anymore. And when you go to close out that month, you will not be able to tie out. So the lesson is here, whenever you're in the chart of accounts and you want to modify or add, only deactivate, do not delete. The information still remains there. You just visually cannot see it within the chart of accounts. And the reason behind us condensing the chart of accounts is to actually train you to be comfortable with what you're looking at. Here's what starts to happen. You build out your chart of accounts and you take it from these 30 items and you reduce it all the way down to 10 or 12, right? And what happens over time is you may want to track a specific line item within your chart of accounts. So as an example, when we have accelerator teams in the house here, one of the key line items that they like to track against is product development. They're in our accelerator, they're given money to figure out if they have a business or a service that they can provide to our community, and we give them money. But they have to spend that money to develop the product or develop the service. And they want to know exactly what they're spending that on product and development. So we actually create, I'm going to show you how we do it. We actually create a line item within the chart of accounts that tracks specifically against that product and development. Now, in your case, it might not be product and development. It might be something else. You might want to track how much you spend on leases for your cars for your business, or any other associated expense that you want the granular detail that is not encompassed within anything else. So it could relate very specifically to the industry or the sector that you're in, but having the ability to track that expense at a line item detail is key to your business. And establishing a line item within the chart accounts is very, very easy. Simply go ahead and click on the new item up here. The system is going to prompt you for exactly what you're looking for. So the very first thing it's going to ask you is, what type of account is this? Well, in this case, it's not a bank account, right? And it's none of these other categories here that we're associated with. So we need to pick the correct category associated with this particular line item. Now, as you can see, there's quite a long list here that is associated. So let's just talk through some of these so that we have a clear understanding of what we're actually looking at. Yeah.
Quick question in the chat. Where do you find chart of accounts?
The easiest way is under, well, they've moved it so many times. Feels like my, oh, it's a split. I see. Yeah.
You extended your desktop.
I extended my desktop. Let's actually walk through that real quick. So the easiest way to do it, to be quite honest with you, is simply to go to the search bar and type in chart of accounts. And it's the very first line item that comes up within your chart of accounts. Super simple. You should also be able to access it through your bookkeeping feature down here. So either way will work. Search glass, search hourglass up here, type in chart, or going down to the bookkeeping will bring up the chart of accounts here. You do have the ability from this section to actually search out specific line items. So if you know that you've created one with a specific title, this is your opportunity to go ahead and search it out here. So let's talk about a couple other examples that I tend to find I end up creating very specific line items within the chart of accounts. Credit card processing fee. This tends to be a big one within the chart of accounts. What do you mean, Damon? Well, we sell a product, we sell a service to a client, we send them out a bill for $25. Client uses Square and pays you back. You don't get $25 back, right? You get $25 minus the fee that Square charged you, right? So that fee is actually an expense to the business, but the only way it's an expense to the business is if we capture it as an expense, right? So we would establish a specific line item in here. We would track those credit card processing fees as an expense. Well, what does that look like? Well, since I started on the previous one showing you how to create one, I'm going to do the same thing again right here. So in this case, we know that this particular instance, it's an expense associated with the business. So we simply go down to expense. If it related to any other specific subject like fixed income, long-term liabilities, we're talking payroll, things like that, equity, income, any of these associated items right here, you would go in and create the associate entry for it.
Hi there.
Hello, how are you?
Very good. How are you today?
Good, sorry for,
No, take a seat. Just getting started.
thank you.
You're welcome. So in this case, we would track it as an expense against the business because basically we know that this is an expense that's going to hit, but we want to capture it specifically. Now, the reason that I like doing this with credit cards in particular is whenever you go through this process, you have to have a way of validating the information associated with the credit card processing. So in this case, we've established the account type as an expense. We want to go back and see what those expenses are associated with. So in this case, you can go ahead and I generally put it under either other business expenses or bank charges associated with it. The choice is yours. And do note that you can customize the name once you've done it up here. So as an example, in my case right here, I'm going to go ahead and tag it to other business expenses. Up here in the name, I'm simply going to say Square fees.
Okay, stop and sharing, resharing again.
Sure. Better.
Oh,
But are they seeing my screen or the other screen?
Zoom can see this, can keep the books.
Okay,
Can you drag it over that one then? So
maybe that's what it is.
drag it over that.
Oh, I see. You guys can't see it. I
Yes,
see what you're
yes.
saying now. Sorry. Man, what's going on here? Okay.
There we go.
Okay, there we go. So as you can see, pretty straightforward to set it up. And now we have a specific line item within our chart of accounts that's tracking our credit card fees. Okay. And so I want you to think in your mind about the scenario that we've created right now for the credit card fees. Well, here's what's going to happen. We're going to have 27 transactions come in from the bank fee, and they're all going to have this little fee inside them, and we're going to be able to tag that fee against the business expense. But how do I validate that now? At the end of the month, I'm going to have a total of, let's say, $100 in credit card fees. Well, you get a statement from Square at the end of each month. The simple answer to your question is now all we do is we go back to the statement and look at the balance on the Square statement, and we ensure that that total matches what has been captured for that period. That way we can ensure that we've captured all the expenses associated with these credit card transactions. And that relates to Square, Venmo, any other service that you want to use out there. And this is vitally important because this has become more and more of a thing these days from a credit card processing. And each credit card processor charges you something different. So it's vitally important that we capture that expenses. A lot of what we talk about today in these sessions is the ability to capture expenses associated with your business. Remember, if you want to grow your business, one of the biggest obstacles that you need to overcome short-term as it relates to your business is cash flow. And in many ways, that's what we're talking about here, is managing cash flow in regards to how we articulate and capture expenses related to your business. So with that said, chart of accounts, take time to get familiar, spend time looking at the chart of accounts and building it out. Close this out so we can actually get back. Spend time getting familiar with your chart of accounts. You're going to spend a lot of time in here when you get to each end of each month and reconcile. You should know what every line item is in here and how it relates to your business. If you don't, choose to get yourself informed. Okay, this is your life and you should know it backwards. You really should, because at a glance, this is going to tell you exactly where your business is at, what is taking place, and more importantly, you'll be able to pick up things in looking at this if you have a clear understanding. So let's take a step back from the chart of accounts now that we've kind of had this roadmap to how QuickBooks interacts and tracks the expenses, income, and revenue that's associated with it. One of the things that I do spend a little bit of time on today as a new business is to talk about credit. And I'm not talking about credit as in a credit card. I'm talking about credit as in managing cash flow for your business. So the single biggest obstacle that small businesses that startup have to overcome is cash flow. Managing cash coming in the door, managing cash going out the door. So let me give you some quick hints and advice on how to utilize QuickBooks to leverage, in turn, your cash flow. You deal with two kinds of entities out there. You deal with a vendor and a customer. You pay vendors for things that you buy from them or need from them to service your customers. Your customers pay you for the services that you provide them. These are your two primary areas of expense and revenue or income coming in the door. But these two specific entities actually control your cash flow. What do I mean by that? Let's say I have a job that I need to do for a client. It involves me buying cement. I go out, I buy the bag of cement. I have to pay for that right now. I go out to the client's house, I pull my bag of cement, I let the cement sit, job's done, I give the client an invoice, the invoice is due in 30 days, customer pays me this day. So that is considered a negative cash flow scenario, right? We took the expense before we got paid, and then we had to wait 30 days before we got the money, okay? In that scenario, you are out those funds that you expensed against the business and any other additional overhead. Well, how do we overcome that? We manage the relationships on both sides. So let's start with the vendors, okay? When you're a new business, you have no credit history, whether it's an individual sole proprietor or a tax ID. You have none. How do we build credit for our business? Well, credit is actually the ability to pay debt back. Most people think it's money that's in the bank or money that's extended to them. It is not. By its very definition, credit is the ability to pay debt back. So you need to make debt, but you need to make smart debt. And you can build credit for your business very, very quickly if you use one simple method, okay? Once you're an entity of any sort, whether it's a sole proprietor, LLC, C Corp, S Corp, go down to your local bank, deposit $500 in your business name, and get a secured credit card. Every single business expense that you do, whether it's getting in the car to drive to a client's house, business expense, meeting with a client for lunch, business expense, all of that needs to be captured. But how do we capture it? We swipe the card. Okay? That bank account is directly linked to QuickBooks. The next day when you come into the office from that trip out to a customer or that lunch with the customer, it's in QuickBooks, right? At the end of the month, we pay it back. You're building credits. If you do that for 3 months consecutively, your business will have a credit score. Why is that so important? Okay, here's why it's so important. Vendors are who you buy from. When you have no credit history and you go to buy from a vendor, they make you pay right then and right there. The risk to them and you not paying with no credit history ensures that they're going to want payment from you. So you bought that bag of cement and you had to pay for it now. But now you've done the secured credit card that I just explained to you. And after 3 months, you go back to that vendor and you say, I don't want to play right now. Can you give me good terms? And the vendor turns around and says, sure, we'll give you net 60 terms. What does that mean to you? Well, what it means to you is that you've got 60 days to pay for that bag of cement that you just bought to do a job. But here's the best part. When's your customer going to pay you? They're going to pay you in 30 days. So you are able to leverage that relationship with the vendor to help you manage your cash flow. So instead of being out of pocket for those 30 days, you actually have the cash before that expense is due. This seems small. Repeat that 100 times. Right? 100 times that scenario. So ideally, we get to a point where our vendor terms are longer, our customer terms are shorter, and in turn, we can do what? Manage our cash flow. Okay? So again, when I talk about credit, I'm not talking about credit as in the credit card. We will get to that in the next class because lines of credit for business are really important for growth. But I'm simply talking about managing the relationship between your customer and your vendor to create a positive cash flow scenario for your business. It seems small, but trust me when I tell you, overcoming cash flow at a small business level is by far the biggest objective that you have to overcome. Does that make sense to everybody? Okay, and I can't reiterate, do it sooner rather than later. The sooner you get it going, the sooner you build credit, the sooner your company can go back to those vendors and get better terms.
We have a question in the chat from Stacy. She says that her QuickBooks account does not look like this. She doesn't have bookkeeping search bar or search icon. Account is for self-employed.
Okay.
A different
Yes.
form of QuickBooks.
It is slightly different. Does she have the online version or the desktop version? Maybe she can answer my question. And maybe I can spend some time with Stacy at the end and go over it with her or set up a online. Perfect. Yeah. So she has the sole proprietor version of it, which does have some limited access associated with it. But I can certainly spend some time with her and go over that in a little bit more detail to build that. And again, anyone that's on the call here, anyone, you want to set up a one-on-one session after this, more than welcome to, okay? I don't want you to sit there and stress and think that you've got to answer every question today. That is not about what this class is about. It's about giving you the tools to get QuickBooks set up correctly so that you can eventually meet with me if you need to answer your questions to get to where you need to be. A lot of what I'm doing today is very generalized, right? Because it's not specific to everyone's business. I'd be here for a couple of days if we had to do that. But I want you to have the core concepts of what are taking place, which are chart of accounts, vendors, customers, and then bank fees, okay? So we've spent a fair amount of time talking about the chart of accounts and how important they are and how they relate to tracking at your business, all right? So the next step that we want to look at after that is dealing with our customers per se. So one of the things I want to talk about here when it comes to customers, and I'm going to stop sharing and jump back into. So customers, let's talk about customers real quick. So when it comes to setting up our customers in QuickBooks, it's much of what we talked about before, ensuring that we're setting them up correctly, relevant information as it is associated with the business. If this is done correctly, it's very easy for you to go ahead and pay out these particular vendors that are incurring debt against the business. It's simply a matter of ensuring that the bank account is linked up, that the bill is in the system, and the system will actually prompt you for that to take place. I think one of the important lessons that should take away from here, and just anybody's referring it, QuickBooks did do an update last week, so the screens do look slightly different. If anyone's questioning as to why, just everyone knows QuickBooks loves to do that. One of the key aspects of your business that you're going to have to overcome short term is AP and AR, okay? Accounts payable, accounts receivable. One of the key elements of managing cash flow above and beyond what we talked about is having a clear understanding of where your cash position is. So as an example, one of my procedures that I used to do on a daily basis, or a weekly basis, is every Monday I would come in and run the next week of my AR and my AP, okay? AR means customers that are paying me. AP, bills that I am paying out, okay? Why? Why would we do this, Dan? Positive cash flow. Okay? Again, I can't reiterate how important this is at this stage of your business where you're managing it and trying to grow your business. What does that mean to you? Well, if I'm running a report that shows I need to pay out $5,000, and then I'm running a report that shows me I'm going to get $3,000 that week, right? So having a clear understanding of what that looks like as it relates to your business is how you stay on top of managing that cash flow scenario. Now, not everyone is in that scenario, but it's important for you running your own business to have a clear understanding of what's coming in the door and what's going out the door, okay? And again, if you're staying on top of QuickBooks, you're reconciling your books every month to tie back to your bank account, you will always tie back correctly. Setting up these small processes to ensure that it's done correctly is vital. So let's talk about banking for a second while we're talking about. One of the key aspects that you want to make sure that you're doing every week is tagging to the bank transactions. Once the bank fees come in and start showing up within QuickBooks, you want to ensure that at least once a week, you're just going in, spending the 35 to 45 minutes that is necessary to tag them to the correct category code. Let's actually see if I can show the banking.
We had another quick question come in. What is this version of QuickBooks called?
This is the latest version. This is just QuickBooks Online.
Okay.
It's not the sole proprietor. There's an accountant version, there's a sole proprietor version, there's an enterprise version, and there's a hosted version, I believe. And it all depends, and there are different subscriptions amounts associated with all of them. The sole proprietor one is fine. It's just a very, very basic form of QBO Online. And do understand, there is the desktop version of this. I'm going to be honest with everyone in the room. I'm more of a desktop guy myself. QuickBooks Online is very much a stripped down version of QuickBooks Desktop. QuickBooks Desktop tends to be a little bit more robust. The reporting is significantly better. My world lies on the reporting side, which is why I prefer QuickBooks Desktop. In specific, when it comes to things like cash flow analysis, QuickBooks Desktop does a far superior job to the Online. Now, with that said, QuickBooks Online does do a very good job, and you can build and customize any of the reporting that you would like to. And I will go in at the end of this and show you the reporting manager because it is a great feature within QuickBooks. You also have the ability to review people's reports that they have generated and customize it to your business need. So you might come across a specific P&L as an example that you really like the format. You can customize that format towards your business, save it, and then every month the system will automatically generate it and put it in your mailbox for you. So there are a number of processes that you can generate that will automate how we go about getting QuickBooks to generate the necessary reporting. As I said before, take some time to get familiar with the reporting. It is actually a really nice part of what QuickBooks does really, really well. The ability to customize and export out is another nice feature. I will tell you that if you're a new startup and you're looking to have investment down the line, one of the key aspects is financials. Okay, anyone that invests in your company is going to want to know, what does your plan look like? Where are your financials? You're able to generate those real time right away. You're also able to do cash flow analysis and forecasting within there, which any investor is going to want to see before they write you a check to invest in your company. Okay, same goes for bank loans, right? So if we're not going to go the investor route, we normally go SBA loans, which we can assist you with as well, and or bank business loans. The very first thing they're going to ask you for if you walk into a bank is the financials. Again, if we've done what we've talked about and set QuickBooks up correctly, that information is all right there. You literally just need to hit a button, send it to them, or generate a report. So keeping that in mind, that not only is this a tool to stay on top of your business's financial transactions and where your business is, you're also able to utilize this as a tool to go out and get additional funding associated with your business. Before, is there any questions while I'm there and before I jump back in?
Nothing online.
No, great. Okay, so let's talk about the banking side. And I am bouncing around on purpose just so that everyone knows, because what I'm talking about today are the key areas that you're going to counter right away as it's associated with QuickBooks. So let's talk about banking and the banking transactions. I currently have my account linked up. You can see you can actually manage connections from here. Right, so I can see that I'm linked up to Pacific Premier Bank. Again, this is a demo, so it's actually not really anything associated with it. But the reason I want to talk about this is that every night, my bank account here, QuickBooks goes and pulls the data over, and I'm able to see what transactions have taken place at the bank. Right? At this level, the most important part of this is capturing the expense and making sure that it's hitting the correct category code. Now, category codes are really important within QuickBooks because it enables you to track an expense at a specific line item. So in this case, let's just say, as an example, that this particular transaction had to do with, oh, I don't know, what do we want to call this? This, let's say these were legal fees. We went and got a business license, we incorporated our business, and it cost us $2,700, right? We would tag it to this associated category code here on the screen. The system automatically knows now that that specific transaction has hit that line item. The nice thing about QuickBooks is it remembers. So if it sees this transaction come back through again, it's actually going to go ahead and put in the professional fees and simply ask you to confirm it. Why is this so important? Well, it's showing you where and when you're spending your money, and more importantly, what you're spending it on. This part is key as well when we do something called a budget. Because here's what's going to happen, guys. You're going to put all these transactions in, we're going to hit all these different category codes, and at the end of the year, we're going to build a budget for the next year, but we want to know, what did we spend our money on? Now, if we go in and we run this report, we can see licenses cost us $2,750. Well, how much is it going to cost us to renew our license next year? $500. Now we start to build a budget based on what our prior year expenses were, right? So having the understanding of not only where things relate from a category code and coding them, but understanding how that information benefits you later on to grow your company. Okay, and remember this, guys, a budget is a roadmap to success. It's like the bumpers on a bowling alley, right? Nobody wants the ball to go into the side and roll down. In many ways, a budget is that bumper that keeps you online as you're proceeding throughout the year. Because invariably, something's going to come up. It's the nature of owning your own business. but having a clear understanding where you're at financially so that you can mitigate that through a number of different scenarios is key. But for that to take place, you need to know what you're spending your money on and when you're spending. So category coding, are we clear as what it relates to, what it's used for? Really simple. If this was, I'm going to meet with a client to discuss a project, right? This expense would then be coded to either travel or hosting, right? It's important, it's so important that we capture every single expense that we can. And I'm going to pose a question to everyone. It's going to be harder for people online because Madison's not here, but I want you guys to tell me why it's so important to capture all of your expenses. Does anyone have an idea? I know you do, because I like hammered it into your head with a nail. Yeah? Okay. Do we like paying taxes? Does anybody here like paying taxes? No? Okay. So you have income, revenue side of things. You have the expense side of things, right? Income minus expenses gives us our revenue, right? We want to pay less taxes. Guess what we got to do? More expenses, okay? Remember, expenses are a direct correlation to your income side of things. So let's talk about this at a high level. If I have $1,000 worth of income and I have $700 worth of expenses, I'm only paying taxes on the $300, okay? That's how you need to think about this from a business perspective, okay? And that's a really simplified version of it. So just take it at that level. But even things such as driving, right? Driving right now in California is 61.7 cents a mile, right? I can assume that pretty much no one in this room for today's trip tracked their expense, right? But this is a business expense. This is professional development, guys. So your drive here, 61 cents a mile. Your drive back home, 61 cents a mile. In QuickBooks, an expense. But Damon, it's only a couple of bucks. Yeah, it is. But do that 100 times and tell me how much you got, right? And it only relates to you. It relates to your employees as well. Right? So again, ensuring that you're capturing everything that relates to your business, that is being documented within QuickBooks, is going to be the roadmap to success that you need. Okay? And getting into that habit now is what it takes to get you there. Okay, let me just pause on that because I tend to get questions related. Yes, go right ahead.
Right, so when it comes to tracking mileage, let's say like you have two, for whatever reason, separate businesses.
Yep.
And you're tracking miles for one, tracking miles for another.
Mhm.
I have a QuickBooks account for my personal,
Okay.
and I have a QuickBooks online account. So
Okay.
self-employed, and then an online account for my castle business.
Okay.
Do I essentially download two different apps and track mileage separately on two different apps?
Mhm.
Or, because right now I'm currently only tracking for the non-Castle Innovations miles.
The answer to your question is yes.
Okay.
You can also choose to, I mean, the QuickBooks Online has the actual app has a tracker on it.
And that's what I use for
Yeah.
the other one.
Now, internally, personally speaking, when it comes to my employees, I don't use the tracker on the app because they actually don't have access to my QuickBooks because it's enterprise level. Here's what I do, guys. If you're taking a trip, I just ask them to Google Map it and email it to me when they submit the reimbursable. So if I'm going to travel from here to Santa Barbara and back for a convention, I Google where I'm going, I create the map, I submit my reimbursable, and I include a copy of the Google directions. It shows I traveled 167 miles, 61.7 cents a mile, done. Here's the other part. When your CPA does the taxes at the end of the year, he wants to validate this in some form or way. You can attach that bill to QuickBooks directly, right? So not only can you have the ability to enter the expense, but you can attach that map. And I will actually show you guys that too in a second, because it is a nice part about QuickBooks is to go paperless. So again, the whole concept of really what I'm trying to communicate here is the expense, everything. When you go buy a pen, when you go grab paper, when you're buying a business license, when you're going to an event, these are all, and this is the area of weakness when it comes to startups or new businesses. Because in their mind eye, here's what you tell yourself. Oh, I can take the expense personally. I got this. The business doesn't. You are doing the business a disservice. I know you think you're helping the business. That's what everyone thinks. You're not. Not only are you not helping your business, you're not painting a clear picture of where you're at financially, which is going to make it harder for you to plan your business out as we move forward. It means you're not managing your cash flow correctly either, right? Because if you have to take these shortcuts now, it's going to create more issues for you down the line. Okay,
One quick question.
yeah, love it.
Mimi asked, it's essentially, it sounds like it's about migration. Her bookkeeper has QuickBooks Desktop. She
Yep.
wants to start online and move the desktop to online. Is there an easy way?
There is a fantastic way. So here's the rule of thumbs with QuickBooks Desktop and QuickBooks Online. You can migrate from QuickBooks Desktop to QuickBooks Online super easy. Simple tool that will convert your QBD, QuickBooks Desktop, to a QBO very easily. Here's what's really hard, to go back the other way. So what I suggest in these instances where you're looking to go to QuickBooks Online, create a file that is a version of your desktop and save it and put it away in a safe place because you can access that file anytime you want. Create another copy of your QuickBooks Desktop and convert it over to a QBO file. Tell her I would gladly meet with her and walk her through the process. It won't take us more than 15 to 20 minutes. Great question, so great question. And again, it's free to anyone that wants to set up an appointment with me afterwards to go through this. I understand a lot of what I talk about today. You might not have the knowledge base and feel comfortable. Set up an appointment with me. I work here every day from 8 to 5. Gladly sit down and go through this process with you. Hold your hand through the process. That is what we are here for. That's the program we run, is to support local businesses. If I haven't said it already, let me just shout it out from the rooftop. Small businesses are the lifeblood of our community. That is why we do what we do here. We understand that you guys are the lifeblood. We want to support local business. We want to keep jobs here. We want to keep the tax revenue here. Whatever we can do to support you to keep your business running well in our local community is what we want to do. So just keep that in mind. We're always here to provide services and help you guys because we believe in the great place that we live. And I'm not just blowing smoke when I say that. I genuinely believe that. Okay. Bank transactions. Pretty straightforward, right? The more you do it, the more you're familiar you're going to get with it. One last thing, said it 3 times already, once a week. Just make a rule. You can do it daily if you want, right? It's kind of like having emails out there that aren't looked at. You're kind of like, oh my God, what could be in there? Same with the bank transactions, but do it at least once a week. Here's what you don't do, and this happens to me all the time. Don't wait 3 months and then come to me and go, oh, yeah, I can't figure out what's going on. I don't know what I had for lunch yesterday, guys. So, I mean, I can't help you out when it's 3 months ago. But you know what I can do is if you come to me and you're like, Damon, this happened last month and I can't figure this out, I can figure that out with you and I can sit there and we can work through it. But 3 months down the line, 6 months down the line, it's going to take me a day to figure that out because I literally have to go through all these transactions to help you guys out. So having good business practice in the manner in which you go about QuickBooks is key. Okay, take the time, make the time, make sure that this is correct, this is up to date. Because in many ways, this is going to be the guiding light for you moving forward from the financial standpoint of where is my business at, what is taking place. Okay. So I'm going to not go any further as regards to bank transactions. If you do have any questions, please let me know. Pretty straightforward as it relates to the interactions. You do see all the associated categories at the top here. So you can actually go back and see what the associated expenses were. If there were any associated at that particular time, you can track sales, you can track sales receipts. And everything that we're looking at today can be done on your phone. So from a convenience standpoint, that's the other side of this, is that all that we were talking about today can be completed and done on the phone. Yeah, well, I'm going to turn that up and listen before. And I lost feeling in my hands. Okay, so any other questions relating to the bank transaction side of things before I move on to vendors?
For example, I started doing, I buy the online
Okay,
QuickBooks like 2 weeks ago.
okay,
And I had a friend, she started out a little bit, but it's like nothing.
okay.
But I put my account bank and QuickBooks. It was the checking and they have the 2 savings.
Right.
But last week I went to the bank to create 4 more
Accounts.
Because I want to put, for example, tips in one account and taxes
In one account.
and
Sure.
expenses.
Sure.
But now I need to help how to connect the other four accounts I created, the new
Accounts?
how to put
The information.
information in the
Sure.
QuickBooks. And we opened the coffee shop right here.
Oh, right here?
Yes.
Okay, congratulations, great.
And we started working with the Clover.
Clover? Yeah.
How to connect Clover with QuickBooks.
QuickBooks. Okay, so did everyone hear the question, first of all? I want to make sure the online people heard it. Yeah, okay. So just talking about a couple instances here. So I'm sorry, your name again?
Pedro.
Pedro. Pedro's coffee shop is wanting to link up, so basically 4 more bank accounts to his QuickBooks, and then have the information roll in so he can accrue basically or tag to these specific accounts. How do we go about this is what he's really asking me. So there's a couple of things that we can do internally. So the very first thing is that from within QuickBooks here, we can go back into banking. Right, and you see right here where it says link accounts, right? We click on the link accounts, right? And we can choose to add any one of these entities here. Now, here's what's gonna happen when you did. You're gonna click on one of these and it's gonna take you to the remote login screen. So just like you do your online banking, that's what you're gonna do here, okay? That's number one. Number two, once you do that, it's gonna list out all the accounts that you want. You just pick the ones. Okay, here's something that's important that in regard to linking the bank accounts that I encounter quite a bit. There's a question at the very end of this process that causes people a lot of problems, okay? And that question is, how far back do you want QuickBooks to pull the data? The reason I bring this up is by default, QuickBooks will go back to the beginning of the year. Well, you may not have opened your business at the beginning of the year. You may have other transactions. So be really careful about the date that you specify when you do go and add your bank account to QuickBooks. Because if it's a personal account that you're linking up to it and you only want to capture the last 2 months and you tell it to capture the last 8, it's going to pull everything over directly into QuickBooks. So be very specific about the period, and it will ask you for an actual date that you want those to be pulled into. Does that answer your question? And that way you can tag to those specific accounts, just like me. So you would have taxes in one, you would have payroll taxes, yeah, things like that, accrual. Keep in mind that QuickBooks does also have a payroll module that is you are able to subscribe to. They handle all your payroll. They handle the filing, the taxes, everything for you. It's a flat cost. I believe it's $3 an employee right now. You can double check that, but they handle everything. So the reason I'm a fan of that is it takes the liability off you. So one of the things that you come to terms with quickly dealing with QuickBooks is, as a business owner, you're responsible for taxes. If you accrue taxes, right, you got to pay them. The BOE will come after you so fast if you're not making those payments. You need to ensure that you're accruing correctly and that you're reporting correctly. I personally like the payroll module because it takes that responsibility off your shoulders. It also takes the liability side. Intuit will stand by what their reporting is as long as the information is relevant and accurate. So I'm a proponent of the payroll module because the amount of time that you'll spend trying to ensure that everything is accurate, that you've got the right accruals over the bank to make payroll taxes, things like that, the QuickBooks module utilizes and does it all for you, and it's not something that you have to worry about at all. So once you get to that point where you can utilize that, I highly encourage people to use the QuickBooks payroll module. The next question I tend to get is, okay, how many employees are we talking about? You're normally good to between 1 and 5. I find most businesses can handle payroll for between 1 and 5 people. As soon as you get to that 5 mark, it starts becoming more of a chore, and you're going to want to start looking at something like the QuickBooks payroll module. And again, it's just an additional subscription on, it's month to month, you can cancel it at any time. We good with that? Yeah. Okay, banking side, we can actually pivot. You've got to really take a look at my study guide, have we? But that's okay. I'd rather be interactive than, let's go into our vendors so we can talk about vendors. Okay, so we talked about customers a little earlier and how important it is to set them up correctly. It's almost more important with vendors. Okay, because there's some tax liability that is created when you deal with a vendor, that if you don't have the correct documentation on file, you are liable for. Okay, so let's talk about that real quick. So let's take ASAP as an example here, okay? So setting up this client and ensuring that we have all the relevant information online, I don't need that much. Really today, it's name and address and email address is what I need to be able to pay them, right? But there's a caveat to that, okay? And a lot of you deal with it, I know you deal with it, and that's the independent contractor. We all know what an independent contractor is, right? It's somebody that's working for your business, there's a defined scope of work, we're gonna pay them a set amount of money, right? And most importantly, it's their responsibility to file, okay? So when it comes to setting up the vendor, we want to make sure that we have the relevant information, but most importantly, when we're dealing with an independent contractor, we want to make sure that we have a W-9 on file, okay? And we can take that document, the W-9 that's completed, and actually attach it to the vendor right here within attachments, right? The reason I bring this up is that W-9 is considered a secure document, which means if you have it, you should have it under lock and key. Well, I'm a paperless guy, and QuickBooks Online makes it really easy to be paperless. Whether it's a customer or whether it's a vendor, we're able to attach the bill or the payment to this. So if the customer set it up and I send a W-9 to them, I can now just upload it into the system and it's right here. It has all the relevant information associated with that thing. His name, his address, his tax ID number, okay? The reason this is so important for you is that come January 30th, right here is where we're going to want to tag for this particular. So if you're an independent contractor, you are responsible for filing your taxes. The only way you can file your taxes is if a 1099 is generated. So when we are setting our customers up, when we're setting our vendors up, if they are an independent contractor, it is vital that you hit that 1099 box. Okay, you also need to make sure that you're generating your 1099s before January 30th of each year. Why is this so important? Okay, it's really simple, guys. If you don't generate that 1099, do you know who's liable for the taxes associated with that payment? You. Okay, so if you pay them $1,000, and you can assume that they have a 30% withholding, just aggregate it out. You're going to be responsible for that $300 if he doesn't get that 1099. Because here's what happens when you generate that 1099. Copy goes to the IRS, copy for your file, and a copy to the vendor, right? The IRS knows that you paid that person $1,000, so they're going to go after them. You as the system have it documented, and the customer, the vendor knows as well. So again, taking the time to ensure that this is set up correctly. Most independent contractors are entities, right? Which means they're going to have a tax ID number associated with them here, or they're a sole prop, in which case they will have a social security number associated with them there. Bring it on.
Once you mark 1099, does it stay that way for each payment?
Yes. Yeah, it stays that way until the box is unchecked. So any transaction that's processed over that period of time will be 1099 automatically. Great question. Other relevant information on here, setting up the bank account number directly with the routing number, which is up here in this section so that we can process payments directly to our vendors as necessary, having the tax ID/social security number on file, and then having the billing rate associated with it. Conversely, the terms, we talked about it earlier, managing your terms with your vendor, key for managing cash flow. And then lastly, but not leastly, if you have a default expense category that you haven't hitting, like if you know the specific vendor is only someone that's used for like insurance, you can tag it there specifically. So instead of having to code it directly, go in, we know that this specific vendor only deals with insurance, you can specify that right here. Opening balances, we don't even worry about because once we establish QuickBooks, we create an opening balance from what it pulls from the bank. One source of truth, our bank is always right, always, which is why we keep these transactions linked in the manner that we do, and we can always refer back. Any questions associated with this before I move on? Bring it on.
Yes, so for example, as you know, we work with a lot of independent contractors, and like, let's say we pay them like chunks of like, let's say $5,000, and we just put it under expenses for like contract labor. We also need to classify them as a vendor and log all that in.
Correct.
And if we do, let's say we put that same $3,000 charge or $5,000 charge, will we kind of be doubling up if we put it under the vendors and also the expenses category?
You, yes, you would. And the solution to that is to create a bill
Okay,
that you can then tag that expense against.
okay,
Does that make sense? Because once you create the bill, it's gonna have that contract labor. And then when we have this payment come in, they will wash out together. Otherwise, you're not gonna capture the expense on both sides, basically. You're gonna have one entry on the customer side and one entry on the vendor side, right?
okay.
Explain to me how though they're sitting on the customer side if they're an independent contractor.
So here under the expenses, like we just gave them a check
Okay.
and,
For contract labor.
right, and we have our normal independent contractor agreement, which kind of outlines a fixed flat rate fee.
But they're a vendor though, not a customer. If you're paying them, they're a vendor. If they're
Okay.
paying you, they're a customer. That's it.
Okay,
So that you should not have a double entry if that's the case.
I see, okay,
Does that make sense to everyone? Vendors, you pay them. Customers, they pay you. No other scenario. Right? Same with independent contractor. Independent contractors are vendors. We pay them, right? So they should always be set up that way. Good question though.
just to clarify, so.
Yeah, please.
They're not giving us the money, for example, we are paying them, but it's considered an expense for us.
Correct.
So it's logged as an expense.
Correct.
Now, I guess what I'm wondering is, do we also, for the vendors, if we're entering in that, let's say, same charge,
Mhm.
if we enter all the information on the screen, would it be problematic with us already logging the expense in the category?
So yes and no.
Okay,
The question that you're really asking me is you have a single line item that we would then break out within the expense. Otherwise, it will be double counting.
okay, so here I can actually
Go in.
go in and
Yeah.
pull that information out.
Correct, and that will
Okay.
total up to that amount and capture as expense.
Perfect, thank you.
You're welcome. Let's touch on that real quick because this is one of the byproducts of having the bank account linked up, right? So hopefully this camera will follow me and everyone can see what I'm doing. So one of the problems that we do have with linking the bank account up to a specific expense, we have our bank account. You give me medicine.
Mm-hmm.
And then we have QuickBooks, right? Let's talk about this quick. And Sean decides he needs to go to Home Depot. And he goes to Home Depot and he spends $2,500. And then he comes in the next day and where's that $2,500 going to be? It's going to be right here in QuickBooks. It will just that line item that we talked about. Now here's where the problem comes in and what you were talking about. Right now, the coding that's going to be right here, the system's going to generate is miscellaneous expense. And the reason that it does that is it sees this clump of expenses that took place, but it does not have this detail. Right? And here's what 90% of the people do. They go, convert. Right? And then the next month they do the same thing. And you get to the end of the year, and you go, I'm going to build a budget. What did I spend on supplies and material? Everything in here as a lump sum. So you're going to have like, 20 grand sitting in miscellaneous expenses. You're going to have no idea what, not a single clue. So what Sean was talking about is we would go in and we would break these out. Okay, so these total up my 4,500. This is supplies and material. This is product development. This was a gas can that I bought. This was, you get the idea, right? So now all of a sudden, this lump sum that showed up within our banking transaction that all got tagged to miscellaneous expense actually gets broken up into the correct category code. So that at the end of the year, when I run that report, instead of just getting a nice big number that says miscellaneous expense, I can see that I spent $5,000 on products on supplies and materials. I can see that I spent $5,000 on product development. I can see that I spent X amount of dollars. But you have to do the category coding for that to take place. And that's why it's so very important to know what this does for your business. When I sit down with these accelerator teams, I like literally hone in on this particular thing so much. Because as long as you have the category coding correctly, the system is capturing the expenses correctly. You don't have to enter a bill for everything, right? You don't have to have an invoice for every single thing. As long as the category coding is correct, QuickBooks will capture the expense with what it is associated. Makes sense? This comes into play a lot when you use credit cards for your company. Okay? So if you have employees that you hand a credit card out for, what happens at the end of the month is you get this nice fat entry that shows up in QuickBooks, but you've got to break it out. Right? So I need to know that what percentage of that was gas, what percentage of that was hosting, what percentage of that was business travel, so on and so forth, so that you have a clear understanding of what you're spending your money on. Because right now in QuickBooks, it would all just hit that miscellaneous expense. You would have no idea. You'd have to go back to your bank statement and go, oh man, okay, yeah, stayed there, traveled there, okay? Stay on top of this. Really, really, really important is the category coding side of things.
Question, for example, if I go to Costco, I have a cafeteria, but I get a bacon or kitchen. I put a gas in my car, but in the Costco I get a bacon. I have I don't know, plates, but it's for.
So you got some going personal, some going business?
No, it's for the business, but it's how to get the food cost, for example.
Sure. Okay, good question. I'll answer your question.
How to.
Yeah, okay. So one of the things that we've got to wrap our minds around from a concept perspective is how transactions are making their way into QuickBooks and how we categorize them, right? And so one of the most important aspects that I utilize, okay, and just to be clear, this is not the only methodology that we can use, but this is the most sound one that you can use, okay? So, you talked about Costco, okay? Let's use Costco as an example, because this is actually a pretty good. Okay, so Costco. Bank. So let's start with this. You have a bank account at a bank. It's a business account. You have a business card, debit or credit, doesn't matter. Okay. You walk into Costco and you spend $1,000 on your business. Okay. That card, that processes through, hits your bank account for $1,000. This bank account is linked up to QuickBooks. So went into Costco, spent $1,000, shows up in QuickBooks, shows up at the bank. The next day, it shows up in QuickBooks. Exactly the same scenario I just created here is going to happen again. It's going to want to code it for miscellaneous expenses. You go in, bacon, gas, rolls, plates, all the category codes associated with it, and the dollar amount. So it totals up to that 1,000. Does that make sense?
Yes.
You understand that?
But how to cost?
How to cost it? This is waiting for you inside the bank right here. Go to. So you see down here, click on this, right? So the system wants to that, so you can record these here, or you can find the category coding associated with it here, right? Where we want to go, and again, we can create rules and attachments down here to confirm what's taking place. At this point, it would be an expense. Let's see, so if we were to choose, oh, let's see, how about, supplies. Supplies at the bottom there. Expenses, interest, purchases, wages. Let's say we spent this on computer hardware right now. And who was paid? So basically from in here, we can break out all the expenses. Now, the one thing you're not seeing, which is on the new one, I don't know if you guys, is normally there's an icon right here that says split. And once you see the split, it will give you the line item to break all of these out, so that you can tag them to the correct categories to get them to total up. You're not seeing on this because this is really old right now, right? But you would have the ability to break out the expenses from a category total, right? Because right now, if I tag this here, it's gonna assume that this entire dollar amount is going here, and you don't want that. You wanna be able to break it out. Now, the other way to do it, okay, remember I told you that was choice one, is literally to get you either your credit card statement or your bank statement. And I actually use this methodology as well at the end of the month to tie it back, right? So if you have a credit card statement that lists everything out, right? You can simply enter that credit card statement in the system on a monthly basis. So there's different methodologies that you can use. You can have it hit the bank account per se, or you can just wait to the end of the month and do one entry against it with everything in there. Okay, the choice is yours. Okay, if you're smaller, I recommend doing it once a month. Don't make work for yourself. Once a month, do the credit card statement with everything broken out, all the category codes. Now, if you're a larger company and you've got 6 employees and they've all got credit cards, that's probably not realistic to do that. So just keep that in mind. But there are different methodologies that you can use to capture that expense. It just, and here's the thing about this part. The IRS only cares about one thing: consistency with which you do things. So if you're going to do it one way, be consistent in doing it that way. It's when you switch up the way that you're doing things that they find the red flags, and that's what they're looking for, because that's how fraud happens, right? And money laundering and some of these other things that takes place within QuickBooks and the bank, right? They're very aware of that. So if you're going to use a certain methodology, stick with that methodology. If it works for your business, stick with it. Don't change. Because the moment you do, it creates a red flag for the IRS and the BOE, Board of Equalization for California. That make sense? Yeah. Okay. This is actually a really good question, because so many people just dump everything into miscellaneous expenses, and then they get to the end of the year and they're like, "Ah, I spent $60,000 on miscellaneous," and they have no idea what it is, right? And so they start digging through, and it's gas, and it's all these other things that they just didn't take the time to break it out. Okay, man, we have been all over the place today. I love it though. Bring it up. What do we got next?
Another jump all over the place. What's the difference between a bill and an invoice?
An invoice is to a customer who will pay you. A bill is from a vendor who you will pay. Let me know if you need more clarification on that. Okay, man, I'm gonna make sure what subject matter I've touched on. I've touched on vendors, customers. And I love the question, guys. Please bring them on. It makes this way more interesting when we're doing this together. Just get it up on where we're at with modules. And it's screen recording me off. Okay. I don't know which side is it. One, I can't get the.
There you go.
There it is. Okay. Let me just see where I've been entering my. This bill check stuff about. Okay. Sales and customers. Okay. Let's get us back to selection. Let's get there. What? You good?
It's just an angry line now.
Oh, they can't see that? So I do need to stop sharing
Yeah, try it again.
and then reshare.
Make sure you're seeing that. Desktop 2, maybe?
This one is easier to track.
Desktop 2. Do you have that option? Yes.
You see that?
Yeah.
Okay. Okay, we are here. But you know what that is? Again, guys, you'll get a copy of all of this. Sales and customers property management. We actually started doing this already. Okay. So let's just, we kind of went through vendors really quickly. We kind of touched on customers, then we bounced over to banking. I just want to retouch on customers really quick, only because it is a really important part of QuickBooks for you as it relates to your customer and getting paid by them. So let's talk about this really quick, but I don't want to walk you through every single invoice because there's no need for that. Actually, I do want to talk about this area. So let's talk about invoicing your customers and the benefits of QuickBooks. So a couple of key points here. If you invoice directly out of QuickBooks, your customer has the ability to pay you right away via ACH. They click on the link, they can process their payment, the funds are in your account the next day. Super advantageous, goes back to cash flow, talked about it at the beginning. Really awesome for you guys. You can see it right away. Easy to manage. System will tell you what invoices are coming due, when they should be due. Always stay on top of your receivables, okay? It's a relationship-based transaction. What does that mean? People paying you actually becomes very much of a relationship once you start to build it up, right? Being proactive and reaching out to your customers to make sure that they're paying you on time so that you in turn can pay your vendors on time. Why is this so important? We talked about credit earlier, not credit cards, your business credit. It works the same way. You don't pay your vendors on time, guess what they do? They report you to an organization called Dun & Bradstreet, right? Why is Dun & Bradstreet so important? Well, when you go to apply for any kind of a vendor, line of credit, or terms, they run your Dun & Bradstreet, okay? And your Dun & Bradstreet is basically a listing of all customers like vendors out there that have processed payments. It tells them what your credit ability is. So it gives you a score. And again, this score is relative to your ability to pay debt back. So just like you want your customers to pay you on time, your vendors want them to pay on time. Here's the other part. If you can't pay a vendor on time, pick up the phone and call them. Okay? It happens to all of us. We all get behind. We all get busy. Cash flow is what it is, but if you at least communicate with the vendor that you're dealing with, they will be a lot more tolerant towards you, okay? Cash flow is cash flow. Everyone understands there are tough times or not, but if you can't make a payment, pick up the phone, do your due diligence, communicate. So they're not doing reporting on you because they will. It's just the nature of the business that we're in. Vendors and customers want to be paid just like we want. Okay, so with that said, we touched on customers, but we didn't actually touch on what we do for customers, right? And the only reason I want to touch on this is one of the sections I go into really deep is the listings, right? That is built into QuickBooks. Now, what does that mean to you guys? Listings are basically any kind of service and or product that we provide to the customer out there. So in some cases, it could be something from as simple as I sell a glass vase to some more complicated things. I used to work for a winery, and we bottled wine and made wine. Well, in everybody's head, they perceive that a bottle of wine is just that. It's actually not. It's about 8 different components that all need to come together before you have a bottle of wine. And that's really important as it relates to your business. So let's just talk through some of these things. Service is just that. It's a service that's provided, whether you're a gardener, a window washer, anything that's a service-based, we're going to track against the customer. Non-inventory items, these are things like supplies and material that you use to provide that service. This is expense, okay? Inventory parts, the parts that are put together to make up a product that we then sell to a customer. Really important. I'm going to spend a couple of minutes talking about that in a second, and I'm going to tell you why. And then bundles, where we're taking groups of products, putting them all together and shipping them out. Let's talk about the inventory part really quick. Now, if you are a business that utilizes inventory, QuickBooks has an amazing inventory control system. I will tell you, I've worked with it extensively. It is amazing. It can do a lot of your inventory control. I've had everything from construction workers to plumbers that I've created an inventory control so that when he's taking stuff out of his van to fix a client, he knows what he's still got and what he can fix. And no joke, the system can track it that closely. But let me just give you a really good example here of what we're talking about. One of the things that we're able to derive from having a clear understanding, right, is our cost basis. Okay, what does cost basis mean to you? It's what does it cost to put this product together, all of it, right? The container, the lid, the store, the stickers, all of it. What does that cost you, right? And the system is able to track that if it knows what you expensed on these products. So let's use the wine bottle as an example. We have a bottle that we pay for, then we have the cork, we have the little screwy thing that screws the cork on, and then we have the label. There's 5 different components there, right, to make one bottle of wine. Here's the crazy part. If I don't have any one of those items on hand, guess what I can't create? A bottle of wine, right? And the same goes for your business if you're producing a product. So at all times, I need to know what of these I have on hand. Inventory control, right? So I have a customer that comes to me and goes, I want 500 bottles of wine. And I'm like, okay, I've got it in reserve, or I need to bottle it, right? I go to the system and I type in 500 bottles, and the system goes, sorry, we've got 480 corks, 450 bottles, 400 labels, and 400 of the screw tops. So now I can go back to the customer and go, you know, your order for 500, can't do it right now. I can fulfill 400 of that order, but I can't do the 500. Now I'm going out, I'm ordering more to backfill that. But I know how much of that order I can fulfill for the client because I have an inventory control system that is monitoring and able to track that, and conversely let me know how many I'm able to produce. Now, I know this is specific to products and our services, but really where I'm actually trying to get you with this is that's great. Now I've produced a bottle, I've got the 400. Here's what's the great part. I know what I paid for the lid. I know what I paid for the label. I know what I paid for the bottle. And I know what I paid for the little screwy thing that holds it down. I now have a cost basis for what that cost me, right? So let's say it cost me $4.50 when we put all of this together, right? I'm selling it for 25 bucks. The system will automatically calculate the margins out for you, right? What starts to happen? Well, you start to figure out what products are selling and making you more money, and what products aren't and services are selling and not making you money. Okay, and start to have an understanding of the rhythm and the cycle of your business as a whole. Okay, again, this is tends to be very specific to products, not so much services, but it relates to services too, just to be clear. Okay, all starts here, right? Again, I'm not going to go too far down into this, but I want you to keep that in mind, that if you want your business to be profitable, you need to understand what it is costing you to produce a product and a service so that you can have the correct margins to be covering yourself and making yourself profitable. We are not a charity. We love charities, but we're not one, okay? We're here to make money. We're here to make money for our employees and ourselves to cover the bills and have a good standard of living, right? And the only other way that takes place is if you have a clear understanding of what's taking place from your business perspective in regards to the product and or the service that you are providing. Questions?
And where do you find that inventory part section on QuickBooks?
You don't. It's an additional module that's added on,
Okay.
just like the payroll module is. We can, and so there is a basic inventory system within QuickBooks. If you type in inventory, it will come up, but the actual module itself does require an add-on.
Okay.
Highly recommended if you do have large inventories. And I've customized this all the way down to a plumber and his van. Because he wanted to be able to type in if he had a certain component break, he wanted to be able to type it and know if he had that component and how many he had on hand. And he could do that. And I can take that and I can scale that out to a winery that services from Santa Barbara to Paso. It doesn't matter. That inventory control system can manage it for you. Threw a whole lot at you in a whole short period of time. So process and let me know if you guys have any questions. Present services we talked about. I'm not going to go through that. Maybe I should touch on sales receipts with you guys. Does everyone that deals with a customer in here generate a bill for the customer, or do they sometimes just facilitate the payment coming in to them via the bank account? And I'm posing the question, okay. So if you have a customer that you're dealing with where you're not necessarily generating the bill, right? You're simply waiting for the payment to come in, This is where we would use something called a sales receipt, right? The sales receipt would enable us to tag that specific transaction to a specific category code associated with the transaction for the customer. So we are capturing that when it comes in. Okay, and that's done through the banking transaction. So you saw when we were in it, it looked to confirm or match. This is a scenario where it's simply confirming the transaction that took place. Okay, it automatically generates a sales receipt so that you don't need to generate an invoice behind. Okay, spend a lot more time on this on the intermediate class because it's a far easier way to facilitate payments coming through as opposed to generating an invoice for every single transaction that you can do, which can be rather time consuming. Okay. And again, these two different scenarios that are being created. One is just the sales receipt coming in, making the deposit at the bank. The other one is generating the invoice that you send to the client. Client clicks on the invoice, makes a payment, we receive the payment, and then the bank deposit shows up at the bank. Conversely speaking, the next day you walk in and you see it within the bank transactions in QuickBooks. Everyone follow so far? Okay. Not going to do sales receipt workflow because we've already done it. Okay, let's talk about accounts receivable. So accounts receivable, so we've talked about AP, accounts payable, you paying your vendors, right? Now let's talk about customers. We've talked pretty extensively about getting customers set up, getting all the information in the system. In this scenario, we basically do generate an invoice to the client. We send it off by email. The customer then goes ahead and proceeds to pay us. We receive the payment. The payment shows up at the bank. The next day we come in, we see that bank transaction line within the bank transactions, and we match it up to an invoice, and we have a wash. And then we repeat, and then we repeat. Okay, two processes that we've talked about, the sales receipt and then the invoice processing directly against a payment being received. I'm not going to walk you through these scenarios because we've talked about them ad nauseum today. But again, generating the invoice, sending the invoice out to the client processes, payment hits the bank then hits QuickBooks. Here's one thing that I would like everyone to keep in mind, and please, again, it's all relative to the business that you're in. I have everything go to the bank. You heard me talk about the one source of truth at the beginning of this. I would try not to have your credit card processing integrate directly within QuickBooks, okay? And here's why, if you are. If it hits the bank, it becomes consolidated and you know that everything is arriving from the bank. Once you start to add in multiple integrations into QuickBooks, it becomes a lot harder to manage them as you see those transactions coming in. There's no reason why you can't just have them all hit the bank first and then show up in QuickBooks. It makes it significantly easier for you when you go to reconcile your books at the end of the month, having one account that it hit as opposed to two. And here's what invariably happens. Once you integrate Square or Clover into QuickBooks, you end up having to integrate all the other ones. And now all of a sudden at the end of the month, you're not reconciling one account, you're reconciling 5 different accounts. Does that make sense to everyone here? And trust me, that's a lot more work because you're bouncing back and forth. But if it all hits the bank first and then shows up in QuickBooks, you literally just need your bank statement with the beginning and ending balance to tie everything in. Okay? With that said, let's also talk about one other thing. We still get checks invariably as it relates to our business. I'm talking to everyone out there. My recommendation for you guys when you get checks is to do the deposits once a week, not daily. Okay? And I'll go back to why. One of the key aspects, and probably the most key important aspect of closing out your month every month, is reconciling. Right? So all you need to do is generate your bank statement. It's going to ask for the beginning date and the closing balance. And if you do that, the system will be able to find anything missing. The key aspect of reconciling is going through the deposits. If you do a deposit every Friday, you will only have to reconcile 4 deposits. Super, super simple. What hit the bank? What did I do? They tie. You do it every day. You got 20 transactions that you're trying to tie back to. Okay. Now I understand if this is a cash flow scenario, you need to deposit the check to get the cash flow going. Got that scenario. But it's far better to do it once a week, consolidate it all, make it easier for you to reconcile. Okay. The other part is know that between Thursday night and Monday night, banks don't process anything. Okay, so while the transaction goes through and you see it on the statement, it's called a shadow close. So everything that actually happens over the weekend doesn't process until Monday night at midnight. Okay, and that's why you see those transactions show up the next day. Keep that in mind as well, right? So simplify your life by making some of these processes part of your weekly procedure, i.e. the bank transactions and the bank deposits, always on a Friday. These are my recommendations based on the world that I live in. Simple little things that you could do to stay on top and make it far easier, okay? Lastly, but not leastly, since we're talking about bank reconsolidations, let's talk about closing out periods when it comes to bank recon. Once you are done closing out a prior period, you can lock that period out. What does that mean? Okay, let's talk about July. We just closed July out. We did a bank statement. We did a full recon. In fact, let me bring it up so I can start. Show you guys what it looks like. And this is an important one. So let's tell you. And here's why that part's so important. So we close out the month, we do our reconsolidation, we produce our statement, entire balance is out. 2 weeks go by. We get a bill. Bill is for last month. Your AP lady goes ahead and she punches it into the system, July 12th, pay it. You get to the end of this month and you look to reconcile this month. What is going to happen? You're not going to be able to tie up. Do you know why? Because you took an expense for a period that we have already closed out and you posted against it. So here's the rule of thumb. Always do your best to capture the expense in the month that it occurred. Rule number one. Rule number two, once you close a period out, do not go back into that period. Post it in the month that you are in. Document within the memo that it is a prior month expense. Okay? This is a flaw that happens all the time. And if you have a staff and you have an AP department, you need to train them for this. I can't tell you how many times I've closed out a quarter. 2 months later, I get a random bill that comes in. And my poor little AP lady, she doesn't know any better. She goes in and she plugs it all the way back to March. I go to close out the quarter, and for whatever reason, I am off by $175. I just can't figure out why. It's because a bill came in for a prior period that we then closed out. So you have the ability to close out periods once you're done. You could simply lock them out, right? Super easy. You just specify the date that you want it, and the system will let you do that. Okay? These are some of the controls that you can have from a financial perspective over the individuals that are interacting with QuickBooks. Okay? So, I'm not going to go deep into this because I do actually do, whenever I do a reconcile, I do it one-on-one with people because they're very intimidated by it for whatever reason. Once I show it to them, it's the easiest thing in the world to do. Okay? All you need is your bank statement, right? And all the system knows, the system already knows what the beginning balance is for the period. It just wants you to tell it what's the ending balance. Once it has the ending balance and the ending date, it's going to go back and look at what has taken place and find the deltas for you that are missing. So it's going to say there's 6,000 showing in QuickBooks, the 6,400 showing at the bank. We are missing $400. Where are they? We look at the bank statement, we go through, oh, that wasn't captured. Why wasn't it captured? Not sure. Let's make sure we got it in the system. We tie it out, 6,400, 6,400, we close out the period. Okay? If there's one thing you take away from today, besides the chart of accounts and what we talked about, it's this. Okay? Nothing gets you in more trouble than not having QuickBooks tie back to the bank. Okay? Because then you don't know where you are at financially. These two should always tie. Okay? Always. And if they don't, then we haven't done something correctly. And more importantly, that's how you know. Because everything I've talked about today right, is guided by the bank and what's at the bank. And it's why I talk about having that one source of truth. Invariably, you came to me, or Thaddeus came to me, he was off, he couldn't understand why, right? And we went into his bank transactions, and lo and behold, we hadn't taken the time to code them and set them up correctly. The moment we did, everything tied back out. So again, creating these processes on a monthly basis so that you stay on top of what is taking place within QuickBooks, in turn keeps you informed about where your business is at financially. Okay, talk about reconcile. Again, I'm going to reiterate what I just said before. I gladly do this one-on-one with anybody that wants to sit down and do it for the first time, because I do understand it's intimidating. Let me know if it's something you want to do. It doesn't take more than 15 to 20 minutes, and I can meet over Zoom, just so everyone knows. You don't have to come down to the hot house. Okay.
I think we might have a question.
Perfect.
Casey, I'm just gonna go ahead and allow you to talk so you can just speak your question aloud.
Thank you. I was just wondering if you could touch on the journal entries for if you have an item that won't reconcile. For example, if you move money from savings into your account and you don't want it counted as income.
Okay,
Something that's
so
be a one-on-one, that's fine.
great question, Casey. Great question. Let's talk. I'm going to talk about journals. Then I'm going to talk about the solution, and then I'm going to talk about its business practice. So, journals. Okay. We utilize journals within QuickBooks to specifically make movements that can't be done through a traditional transaction. I loathe journals. Loathe them. Why? I was an auditor. Okay. My job was to go into businesses and audit their QuickBooks. Right? The very first thing I walked in and asked for the very first day, I want to see your journal log. Okay. Journals in many ways are examples of things that have not been done correctly through nobody's fault, right? But if we are doing a journal entry, it means that we have either missed or don't have a defined process for something taking place. And it is okay to do journals. We all do them, even me. I don't like them, but they are part of doing business. Now, in this case, what Casey is specifically talking about, it can impact how the system tracks and records income. So, the ability to do journals is a plus. I will not teach you how to do it at all. I will meet with Casey one-on-one and I will show Casey how to do it, but I won't do it. And here's why. Any journal that you're doing, I want to know why you're doing it. I want to understand the process behind it. I got a pretty idea of what Casey's already told me why she did it. But here's the thing, if I have to do the journal, it means that I need to go back and look at my processes and create a process. I don't have to do it again. That is my one rule internally as it relates to journals. The other part is, if you don't know how to do a journal and you attempt to do a journal, it can become a shit show. And excuse my language. I mean that genuinely within QuickBooks, because a journal overrides every single preset rule in the system to facilitate that transfer taking place. Now, in Casey's instance, it sounds like she was specifically moving funds from one line item to another line item, and she simply wants to make sure that it's being captured correctly. Am I correct in saying that, Casey?
It was just, it's money that's already recorded as income in a previous instance, but I moved it from savings, so it shows on my bank statement.
So I'm curious why we didn't just do the transfer in QuickBooks as well. So we have the ability to do the transfer directly from QuickBooks to move it, say, from a checking to a savings, so it would capture that transaction. Now, if it hasn't, that's fine. We can certainly, I can show you how to do the journal to facilitate that taking place. And if it's in a prior year or a prior period, that's absolutely doable. Does that make sense?
I'm just not sure I know how to do it, so I'll set up a one-on-one with you. Thank you.
You're welcome. I was just about to say, when it comes to this kind of subject matter, let's set up a one-on-one and I can sit down and do a Zoom call. You can give me a little bit more details.
Okay.
So I don't want anybody else in here to think about journals at all. No journals, right? If we're doing it right, we don't need to go down that path. These are unique instances. I'm going to I have a great time sitting down with Casey and figuring out why this happened. Again, it is part of doing business. I spent actually quite a bit of time in my advanced class going over this. This is where we start to get into things like tax accruals, where we do need to do things like that, or payroll accruals. So I do touch on it, but I want to be really careful because it is very specific. Don't want to teach you guys how to do something that you don't know how to utilize effectively. So I hope to speak to you later, Casey, and we can go over this in a little bit more detail.
Another question online, is there a different process for adding funds that is not income or a sale, or is journal the only way?
No, there's a number of different ways that we can go about adding funding to it. It can be everything from an owner equity investment. It can be investment, it can be capital injection. There are a number of different scenarios. Again, as with everything that we've talked about, it's very specific to what we're doing and how we're going about it. Is this person taking a controlling interest in the business? Will they have shares? Will they have? So it gets very, very specific how we go about it. Again, this would be a great example of me having a one-on-one session and understanding what is taking place before I did or handed out advice with regards to that question. Can you definitely do this again? Is it seeing me?
Other hand.
Other hand.
Yeah, I do now. Sorry, folks, we're trying out a new.
We got a cool new camera today
Perfect.
that's still trying to figure out as the saying goes. Who was that asked that question about?
Sarah thinking?
Okay, so Sarah, love for you to reach out for me so I can spend 10, 15 minutes and just explain it to you. Again, I want to be really careful about the information that I hand out to you guys. I don't just do general, well, you'll do this, because it actually could create more issues for you. So having the time to really focus on one-on-ones is really key. I'm in the office every day. I love what I do. So don't hesitate to reach out to me so we can talk about this in a little bit more detail, or stay on the line and we can talk about this actually afterwards, whatever works best for everyone. I got like 10 minutes left from a subject matter perspective. We've pivoted quite a few different places today because I wanted to really touch on some key aspects, but just things to keep in mind that we've really talked about. We've talked about vendors, we've talked about customers, how important it is to get them set up correctly, W-9s on files for our 1099 individuals that we're dealing with, reconciling our bank account, linking our bank accounts up, right? Chart of accounts, big one, really, really big one, making sure that you're comfortable with the chart of accounts, right? Understanding what is taking place. If you see a line item in there and you don't recognize it, then you need to be asking that question. The reason I want to kind of pivot there is I do want to take a look at the reporting side of things within QuickBooks for you guys, because I've talked about it quite a bit. I'm just going to run you through some simple reporting for right now, but I build on that in my next class when it comes to tax reporting and tax liability reporting as well. But I do want to spend just a little bit of time going over the reporting module within QuickBooks because it is pretty robust. So in this case, I'm just going to go in and pull my collection report as an example. So this would be AR. This is money coming in. These are people that are scheduled to pay me. This is a great way for you to forecast out what you expect to be coming in the door, so that when you go and look at your vendors and what you are paying out, you can manage that cash flow scenario. Excuse the dates here as they are pretty old, but you can clearly see the dates associated on the left-hand side here, right? And the due dates right here in the middle, and then the dollar amounts associated, right? So the system is telling me basically, if everything was up to date, that we have a total for Taylor Engineering right now, $7,650. And we're showing right up here that we have this Cal Edison that's due, right? And then these journal entries down here that relate to specific items that I'm not even going to go into right now. But having this understanding of this collection report and what is taking place and the period of time that you're able to do it is key. Okay. Now, it's not just collection reports that you can generate from within here. You can generate any report that you want to. You can see my screen. You can simply go down here and find a report as to what you're looking for, whether it be AP, AR, contact list, purchase orders out there. And we haven't even touched on purchase orders, just so we know. We do get that into that in my next class. I don't know if any of you guys use purchase orders for your business, but it is a great tool and I spent quite a bit of time going through the purchase order process. Again, just taking a look at any reporting in here. So how about, let's try, So now the system is gonna go back out and look for me and see what. Everything's been paid, luckily for me, so I don't have to worry about anything. But it's gonna basically go out and generate that AP report again. Again, you can customize this report, you can save this report, you can generate new filters on this report, you can rename this report, and it will be available to you and your business anytime you go back. Take time to get familiar with the reporting manager. It's actually a really great tool. I spend at least 30 minutes every Monday going through this to make sure I'm staying on top of AR, AP, and where's my cash flow scenario. Same thing you should be doing, just like on Friday, you should be doing the bank reconciliations and clarifying those transactions and your deposit. These are all little processes that you want to put in play for your business to be successful moving forward. Okay. I'm not going to spend too much more time on the reporting side of things, only because the more you utilize, the more comfortable you get utilizing this. Before we wrap up for the day, is there any other additional questions, concerns, feedback? One of the things I like to do at the end of this, you will get a questionnaire, right? Please just give us some honest feedback about these classes. I'm a bit of a non-traditionalist. I'm not going to sit here and go through that PDF line by line with you guys, because then I'm just reading back to you. I like the interactiveness of how we go about this, where you're posing questions, and I actually can go in and show you real world scenarios. So again, if there's more things that you'd like to see in these modules as the beginning classes and the intermediate and the advanced, let us know. The feedback is the only way I can go about improving what we do. Again, I never want this to be a classroom where I'm just sitting here telling you guys. One of our philosophies here is learn by doing, which is part of why I want to walk through the process and make sure that everyone feels comfortable. Lastly, but least, I will remind everyone, I will send out the study guide as well. Everything I went over today is in there. Everything I go over in my intermediate classes is in there. And everything I go over in my advanced class is in there. So keep that in mind if you want to attend any of the additional classes that we have to offer. If you're on our mailing list and you're signed up as an SBDC client, you will get those reminders. If you're not a client, I highly recommend that you sign up. So we don't just do QuickBooks workshops. We do a number of other workshops that may be something that would appeal to you. But that's kind of my material today. We've got plenty of time. If there's questions, if want to hang out to do a one-on-one, let me know. Otherwise, we can certainly schedule a follow-up. And thanks everybody for attending today.